Yo, yo, yo. Welcome back to the channel. So it's Sunday. We're going to have our technical update going into Monday, which is going to be January 10th of 2022. And where do we stand? So with AMC, obviously in the recent weeks, we've gotten this double bottom looking potential double bottom reversal happening here. And it's pretty similar to other times. And I've even posted about how, and I think I talked about on the channel too, how this in extreme gains, which I mentioned in my last video. So yeah, I did talk about it. This is kind of like this entire move reminds me of this, but on smaller scales. And so he's looking at it from a fractal perspective. And seeing this as that second potential bottom. But he also does say, I think that what he's saying is the question is, do we bounce up here and then come back down again? So it would look something like this sort of move, perhaps, before you reverse up, if this fractal does play out. And so, like, for me, I know that the channel really recently, like the past couple months, I've been really focusing on just pure TA because I feel like it's my strong suit. I feel like that's where I'm strongest. And when I get into like cycle theories and fractals and stuff like that, it kind of throws me off my game, if I'm being honest, right? I'm very price action based technical analysis guy. We've focused on Wyckoff, understanding the institutional trading side of things. So at the end of the day, price action is really king. Seeing that volume come in behind certain price moves is really what we're looking for. So that's just something that I'm keeping my eye on. I'm not going to sit here and say, I think that definitely we're going to play out the same exact fractal, et cetera, et cetera. But if you want to know more about that particular theory, go check out Extreme Gains on YouTube, who I shouted out before. Make sure you go check him out. Anyway, so from the pure price action standpoint, in a lot of ways, we're in pretty much the same spot that I was talking about before. That is not the trend line that I wanted to draw. I know that we have on standard charting, which I don't use as often, but I do think it's relevant to bring up. We do have this trend line that is potentially forming. So we have the buy button bottom as well as the bottom right before the May rally. These two price points do converge with the recent bottom that we may have established with this double bottoming move. You can see here. I should use my magnet tool, shouldn't I? Let's do that. Here, and then extend this outward. So this is definitely something that I'm going to be keeping my eye on as far as finding support. So if we come back down, like on lower time frames, if we see a move down, we definitely want to be finding support here. Like if that was to happen at open tomorrow, it'd be around $21. You definitely want to hold those levels if you want to continue this trend line on the regular chart. And I do think that linear does have value. Like I know that I use log most of the time, but I think that linear certainly does apply. Like trends are relevant in linear. So I don't want people to misunderstand that. I just prefer log just because I like to look at the longer term price action and how it correlates. And you do kind of have these few touch points on log as well where you see the price turning around at this level too. So definitely a trend I'm going to be watching for as well. I do want to talk about a narrative that you're gonna see out there from a technical standpoint. You do have a death cross potentially occurring on the daily chart, the 50 and the 200 exponential moving averages. The 50-day moving average is looking like in the next week or so, it's going to want to cross over the 200, which is generally bearish, okay? That's why it's called a death cross. And the opposite would be a golden cross. So that's when the lower 50 EMA moves above the 200, the longer term 200 EMA. But I will say that historically, so it is bearish, but it can be a lagging sort of indicator. Okay, so like momentum traders are going to use this, but it doesn't, like a death cross doesn't mean that it just stays under forever. So an example of this would be back here with AMC. You can see that this death cross occurred and it lasted a few months before you broke back up. But as you can see, a lot of the damage from a price action standpoint was mostly done. And I'll show you even more specifically here on Bitcoin. This is the same EMA cross, right? Bitcoin, whenever this EMA cross occurred from its peak, and this is without wicks, by the way, from its peak, it had already seen 50% losses. And from there, from this exact date, if you were to measure from the top of that date, you only saw another 9% in losses. Am I saying that that's guaranteed that you don't go into a prolonged correction? No, I'm not saying that. I can't guarantee that, okay? But what I will say is that there is a narrative to be had where you can have a cross. So you can see this crossover. And this is why I don't use EMAs too much, because they can be a little bit misleading. When you see these crosses, they are good for forms of like support and resistance. But when you see a cross, it can be a little tricky because you could see this EMA just roll over like this. If it follows this trend upwards, right? If you get a bounce at this trend, basically you're going to see the price will do something like this, because the 200 EMA is just not going to move as fast as the 50. That's kind of the point, right? So you could see the cross happen like this, but price could just continue upwards underneath it like this and cause this sort of cross back over. I mean, it happens all the time. So I'm not sitting here trying to give you hopium and stuff, but what I'm saying is you're gonna see a death cross narrative, and I'm not saying that it's invalid, but I am saying that like most of the time they're not gonna sit there and explain to you that it also could be, a sign that most of the correction is done. It's not. You have to use more than one technical indicator to come to a conclusion like that, right? So the reason that I am relatively confident that we are nearing a bottom is because of momentum indicators like RSI being very oversold. You're very close. Let me take this average off of here. I don't like that. I to be honest with you, I've never used a moving average on RSI. Maybe I should do some research on that. I've just never seen that done before. But you have RSI kind of turning around here, right? So you see price kind of had this pop up. RSI is having a pop up, so you're creating a higher low on RSI, which is indicative of you having a little bit more minimum. Now, it is mostly convergent on the daily with the price action because you have this higher close as well. So it's not a bullish divergence, but it is nonetheless a trend to the upside for momentum that correlates with that trend line bounce, right? So the things that we're going to be looking for, again, it's the same as it's been for me. I'm looking at those key Fibonacci's. I'm looking at the potential falling wedges that we're in, right? So here. So we have, oh yeah, I got the magnet on. See, this is why I don't like the magnet. It's all that weird. Oh, sorry, I don't like to curse in my video. So you have, it's been a while since I said that. This to green. So you have this large falling wedge, and then you also have the smaller one that has this bear trap like built into it. So it broke down below, caught support, and then you're back into this potential wedge. Both of these, I mean, you can still drive down pretty low, and that's why this trend line is going to become key for bulls in the short term. We've talked about the Fibonacci levels, right? So measuring here in this recent move, like we said, you did have this double bottoming sort of move here. Yeah, so you see here on the daily, you have the double bottom. What fib was I trying to show? Oh yeah, it's here to here. Your retracement locally here. you did come down to your 0.5 for this local Fibonacci retracement. Let me go on a lower time frame. Let me get this RSI too, because it's getting all right. Yeah, so you have this 0.5. We've talked about over and over again how AMC does like its why is my scaling so? Oh yeah, look, if you include the pre-market, that's what it was. If you include the pre-market pump, you have broken down below your golden pocket. And then you kind of reverted back up. We do know that AMC likes its 786 retracements, so don't be surprised if you see a move down here to $22. And then this trend line kind of converges with this Fibonacci at some point. All right, so if I'm being honest, I really just looking at the chart objectively, just like from what I'm seeing here. Oh yeah, this was a falling wedge too. So you have a shorter term falling wedge here that you broke out of. Like this, okay? So you see this support, you found it as support again, support again. This trend line, you came down, you broke down out of it, and then you found it as support before you broke out of this falling wedge. This could be considered a retest, but I talked about it in my last technical video, I believe, or maybe it was where it was just like a talking head video that I did, but where you could crawl back down, hit that 786 that we talked about, and that would be like another retest of this falling wedge. You really need to see bullish volume come in this situation, okay? So like if you open red, you come down here and you touch this sort of $21.50, $22 region, you need to see a bullish reaction, all right? Like that has to happen. And if that doesn't happen, then and I know again, I always say it, but I know that people say the volume is manipulated, right? They're handling it on dark pools, their order flow delay, et cetera, et cetera. Like I get that, but again, I'll just repeat myself just for the sake of repeating. Regardless of what happens, the chart is significant in my opinion. Okay, and I mean I'm not the only person in the world that can make that sort of decision as to whether or not technicals are important. In my opinion, they are, but you can fully disagree with me, and that's totally fine to do. But whatever chart, like I am just assuming that this chart is completely manipulated at this point, okay? And I am analyzing it technically to try and understand the potential following moves, if that makes sense, right? So it's not so much about we're in this like natural environment. I don't think like I'm not saying that we're in a natural trading environment. What I am saying is that technicals are a weapon that are being used by the opposition. You can call him composite man if you want to, in order to make you feel a certain way in order to get a certain reaction from you, okay? And so what I'm trying to do is better understand the price action from a technical standpoint, the volume, everything like that included, in order to understand what the price action may do in the future based on that manipulation, if that makes sense. I know that's kind of complicated, but somebody out there probably understood it. So yeah, anyway, again, from a downside standpoint, I've talked about this on the channel a bunch of times. The potential scenarios are, well, okay. So this is the optimistic one, okay? If you do fib on the log scale without hold on, my computer is crashing, I think. Oh no. Okay, sorry. If you do fib on regular, oh, that's what it is. On regular without extended hours, okay. Without considering the extended hours top, okay? And I know that this sounds weird because the extended hours top is technically a part of the price, okay? So I'm not saying that we don't want to acknowledge that. I'm going to run you through all of the scenarios. Just bear with me. If you measure from the bottom, right, in January to the top with regular trading hours on and no log scale on your Fibonacci, you see that price turned around at this 786, okay? So you broke below it and then you traded within it for a little while, but it ultimately held as support, okay? And then also correlation with this trend line. If you measure the same way from that low, right, that trading range low, which was the buy button bottom here, we have technically come to this 786 level, right? Like we're pretty close to it, and you could still see that further downside, right? And I'm not saying that you have to create this sort of correlation, okay? Like this doesn't necessarily have to happen. And honestly, like in real life, I would never, in a situation outside of AMC, I would never like use this as a, oh, well, it did this last time, so it has to do this time. But stocks do like to respect similar movements, okay? So the reason that I say this is optimistic, I know it sucks to talk about it going down below 20 again, but if this is the retracement that happens, it would be a confirmation that you've seen almost all of the downside, right? So on the less optimistic terms, and again, we've talked about this before on the channel, if you were to measure the same Fibonacci, but you were to turn log scale on, oh, see, this is the one where we went after hours. Sorry. So, and again, I'm just covering all the bases, okay? Well, okay, look, let's look at it. Let's look at it without extended hours first. Sorry if this is confusing. If you do that with log scale, see here, you held this 0.5 Fibonacci with log scale on. See, you're kind of in the same spot. Yeah, you're kind of in the same spot where, okay, so basically, this would be, both of these scenarios would be calling for 1950-ish, okay? Now, let's do extended hours and then do both Fibonacci's with and without log scale turned on, okay? The buy button collapse when measured this way. Dude, I did not double click just. Brought you to where you hung just above that 618 Fibonacci, okay? And we've talked about this before. You hang just above this 618 Fibonacci, find that trend line, and then carry upwards, okay? And you can see that this 382 and the 236 became relevant points of support and resistance. The 0.5, you jumped off right here at like $7.05 before you rocketed up and then kind of did this trading range thing where you eventually held the 382. Let's see what that looks like on our new trading range, right? All right. So this, right, has us to where we've hung above the 0.5, right? But we never came down and kind of tested this 618 region, okay? So this is something that we need to be mindful of. Now, I know what you're thinking, but I thought you said that the trend line was going to hold us here. So look, the 618 is 1450, all right? Trend lines are just that. They're trend lines, and trends are meant to be held or broken. They're not. They're just relevant points. You can tell that this point is a point where bulls are coming in and saying, "Hey, we want to protect this line." But bears can come in with greater effort and break this. Okay, that's totally possible. It's just a relevant line of support for us to be following for now. And after this trend, if it's broken or held to support, there will be other trends to the upside or the downside that we're going to look at that are going to be different from this one, right? So I don't want you to think that this trend like has to hold. And if you've been watching the channel for a while, you understand that concept. I'm just making sure that anybody who's like new to the channel or new to technical analysis understands that I'm not sitting here saying that this has to hold, okay? I do think that when it comes to relevant support, when you do Fibonacci and you look at it from this angle, I would find it hard personally. Personally, I would find it hard to see the price going below that 618. Okay. So if this situation were to ever happen, I don't know whether it will. My bias is that it won't based on this double bottoming action that you have with the recent volume. But if it were to happen, I do personally believe that you would be finding your like basically bottom for the foreseeable future if that were to happen, okay? Um and to me, I would see that as a buying opportunity personally. So that's pretty much it. Those are the things that I'm mostly looking for. Um, mm, Let me look at these old patterns, make sure they're the inverse head and shoulders that everybody was talking about. I do think that this is technically I don't really like this setup. I don't like it as much as I like this more macro setup, as well as my cat Simba is like clawing me while I'm trying to chart. So there you go. That's a thing for me. I don't like it as much as I like the falling wedge look. I just think that the falling wedge is a little bit more convincing. Pretty much looking at almost this entire trading range as somewhat of a falling wedge. This just looks more like a falling wedge sort of move to me. If you're looking at bullish reversal patterns, and it kind of creates this inceptionary kind of thing where you see the price continue to create these falling wedges over and over again in the process of this reversal, and that's kind of why what I've been hard, because what I've noticed is that Wyckoff, like falling wedges are some of my favorite patterns before Wyckoff, but once I started applying Wyckoff, what I noticed is accumulations and falling wedges are very heavily related to each other. So you'll see Wyckoff accumulation, like I'm having a really hard time right now because like he's literally leave me alone, somebody, dude, come on, man. All right, I'm trying to make a video here, okay? All right, so look, if you look at this section of the chart, this falling wedge that we charted back when we were falling down from 52 and eventually found support at like 33.50. This move here. Oh no! What did I just do? Rune. All right, this part of the chart here, right? You have this distribution. Then I see this as a sell climax, automatic reaction, sell test, in phase B. This would be like your phase B distribution. And then this would be your spring, which was immediately followed by this explosive move up here, which was a sign of strength. Okay. And then you had this backup LPS phase before you had your eventual markup. Okay. And you see here that we went into this markup phase and then we got distribution. But you can see that a falling wedge also can behave as an accumulation pattern before your markup. And then a distribution, a lot of times, and this is kind of where I got my like Dave always calling for downside thing, was this era of the chart here, because this is when I started my YouTube channel. But I kept calling for downside because these distributions, I was charting them. Leave me alone, Simba. I was charting them as rising wedges, and I'm obviously drawing this very roughly, okay? But you can see here that these are distributions, right? Wyckoff distribution. Just look up the distribution pattern, and they're rising wedges as well. So that's just something interesting to note. Something like from an educational standpoint, something to look for in charts. If you're ever like trading, and this happens on all timelines. If you're ever trading, it's just something to look out for, So does this look like a rising wedge or a falling wedge to you? I think, I think AMC is just a wedge machine, dude. Like, honestly, I just think that that's what AMC does. AMC makes wedges, and that's the algorithm that it's trading on. Again, I completely agree that the whole thing is pretty much manipulated. I think that pretty much the whole market is manipulated at this point. Wyckoff has pretty much ruined every chart for me because I just see Wyckoff everywhere I look. I see the footprints of institutions trading. But my fundamental belief hasn't changed in the stock. I believe that institutions are on the bullish side of AMC, and they are looking for the opportunity to buy this stock up so that they can later sell the stock's brand at a higher price, okay? And I honestly believe that. So that's why I say no matter how low it goes, if it goes down to this $15 range, but then they turn it around and they run it up to $150, I honestly believe that they will be able to create the media frenzy needed to sell this stock at $150 and honestly beyond. We saw them do it with GME, right? I've talked about the GME chart. Again, I'll show you the accumulation that we talked about in that other video that one time. Oh man, I got all the stuffs on here, huh? Let me get these EMAs off of here. Why is this so choppy? Did I turn the wicks off of this? Weird. But yeah, look, I mean, look, this is a GME. I don't know. Maybe that's not a flying wedge. There you go. Let's see. Let's test our Wyckoff falling wedgie kind of theory. I don't like it too much. You could make the case for it, like this bear trappy kind of falling wedge thing, but I don't know. And I'm not saying that every accumulation is a falling wedge, but I'm saying every falling wedge is an accumulation. Does that make sense? Look, you can see it here. Bro, big bot status. Come on. Boom. See, this is a falling wedge. You break out of it. This is the end of your accumulation, okay? But anyway, look, I'll show you the accumulation schematic, okay? You can't make this up. This GME, this was January 2019, basically through October 2020. When did people hear about Roaring Kitty? That was like June of 2020 or something, July of 2020. This is a clear accumulation, in my opinion. Clear as day, right? And that's not to say that retail didn't have anything to do with GME and the meme stock rallies or anything like that. But what I am saying is I do think that institutions are playing the game as well. Okay. And I do believe that they will be able to play the game again. Will they be able to play the game forever? Is MOAS a real thing? Those are really more difficult questions for a guy like me, a technical guy that doesn't sit around and dig around into DD and all that stuff all the time, to answer. But I will tell you that from a technical perspective, to me, they have running room on this thing. This to me, I think that like from an LEO wave perspective, you have wave 1, 2, 3, 4, and you're trying to establish where the bottom of your 4 wave is. But you have a 5th wave in this. I do not think that $72 is the all-time top. Am I saying that to get you to bet big on AMC and buy weekly call options that expire this week for $145? I would not recommend that. But I am not a financial advisor, and this isn't financial advice, so you can do whatever the hell you want with your money. Just not for me personally. What I'm saying is I am personally bullish. Could I be fucking wrong and this thing could go to zero? Absolutely, dude. Absolutely. That's totally possible. You need to do your own due diligence, come to your own conclusions. But that's what I personally believe about the stock. So with that being said, oh, by the way, I do think that like there is a possibility that MOAS and stuff like that is true. Okay. I'm not saying that I don't think it's true. But if we're going to get there, I think we're going to get there with institutions on our side, beating their opposing institutions, if that makes sense. And I will not sell my shares personally, just in cases. All right. But yeah, when it comes to like the short-term price action options and stuff like that, that's where like, you know, using like Tyler Wilson talks about, you know, using, you know, I'm not telling you should do it, but that's what he's doing is he's using options to build up his stake because he believes in the long-term thesis. You know, I generally agree with that sort of sentiment. So with that being said, hopefully you enjoyed the video. I know I was pretty long-winded. I always am. But yeah, so have a good week, and I'll talk to you guys tomorrow. Peace, peace, peace. Follow me on Twitter, and my Discord is free, and the link in the description down below. Take it easy.